Welcome back. Now, the budget this year provided an impetus to the Gujarat International Finance City, the GIFT City as it's known. Now, the powers under the SEZ Act will be delegated to the IFSCA, which is the International Financial Services Centre Authority, to avoid dual regulation. Also, approval from SEZ authorities, GST and RBI, SEBI, IRDAI, all of these approvals will come under a single IT window. So these are just some of the changes that perhaps are going to usher in better times for all those operating out of GIFT City. Vivek Iyer is partner and he's risk leader of financial services at Thornton Bharat, and he's joining in to discuss the implications of what was announced in the budget. Vivek, thanks very much for being here with us. We've had a chance to go over the fine print over the last couple of weeks. So you tell us, I mean, let's start with the framework itself, the points that I mentioned, that you have the single window clearance coming in and, powers being granted to the IFSC authority. How significant would this be in terms of the architectural framework for GIFT City?
So the architectural framework for GIFT City will become significantly simple. The objective would be that all the market participants do not have to go to multiple regulators. They just have to go, just imagine getting into one web page and kind of knowing what all your requirements are and just kind of finishing and updating all of them for the purpose of getting all clearances. Ease of doing business is it cannot be better described than this initiative that's actually being driven. Offering a single window IT system for IFSC, SEZ, GST and RBI, SEBI, IRDA is one of the ways in which all the requirements actually come in one window. They significantly ease the whole process of setting up a business within GIFT City. So from an architectural, structure standpoint, personally, in terms of, I think it's a great way of, honestly, in terms of really crediting the way the framework eases up.
Do stay on. We're getting numbers coming in from Nestle. Appears to be bang in line with what the street was anticipating. At the bottom line, the company has done a profit of 628. This compares with our poll of 618, so in line, and it implies a growth of about 62% on the bottom line. Margins have come in ahead of street expectations, so beating our poll by 150 basis points. EBITDA margins at 22.9%, which means unchanged compared to what the levels were a year ago. The street was anticipating some margin contraction that's not taken place, and the margins have come in better than what the street was anticipating. So 22.9%. There you have it. The beat for Nestle is in the margin performance ahead of what the street was anticipating. The reason the profit is showing such a big jump of 62% on a year-on-year basis, that's because there was an exceptional loss of 236 crore in the comparable quarter of last year. If you strip that out, the number is not going to, the profit growth is not going to be that large. Top line broadly in line with street estimates, perhaps missing our poll by about 120 odd crore, but on the margins, the company has delivered a beat and the street seems to be liking it, though the stock has come off a tad bit from the top of the trading session, but holding up in the green. This is also one of the more expensive stocks, right? Trading at about 60 times forward multiple.
Okay, well, that's the Nestle number, but let's get back to that conversation with Vivek. Vivek, let's get in your thoughts on what it will mean to allow ODIs, or these offshore derivative instruments, from GIFT City. I remember a couple of years back, SEBI had come down quite heavy on these instruments, ODIs. They were seen as very opaque. They were seen as not prescribing to the law of the land. So what marks the change now to sort of make them, to institutionalize them from GIFT City? And what kind of derivative products do you think will be offered? Will there be more will there be more takers?
So definitely in terms of the whole ODI piece is a great initiative, because the whole challenge of the ODI process earlier was about lack of visibility on who the ultimate investors were. And the whole challenge was that it was in an entirely different jurisdiction. The challenge was absence of control. Now with GIFT City, it actually offers us a gateway into the international market, and it now allows us the facility to actually get overseas investors to actually use the GIFT City route, use the ODI route for the purpose of actually offering Indian investments for the purpose of these investors through the ODI route. The ODI was never a challenge. The whole point was the underlying visibility that they actually had on the ultimate end investors, with which GIFT City the whole problem stands addressed, and it is only natural that from an ODI perspective, it was it was but a natural step to kind of bring that in. And this is just the starting point, because once we have ODI kind of instruments kind of being active, we will have a lot more capital coming in, a lot more investments coming in, and a lot more derivative products actually being offered. Because more the amount of investments, more the capital, more would be the need to actually hedge your positions, which offers need for different kinds of instruments to happen. I mean, just an example. Maybe I'm extending it here, but deepening the fixed income market in India, having actually a high yield bond market in India could actually be a next step. Having derivatives in relation to that could be a next step. So maybe I'm getting ahead of myself, but these are really interesting times. And in terms of even sky is not the limit in terms of
Sure.
what are the kind of
So,
products that can be offered.
I was just getting to that. Given what you understand, talking to a lot of the players involved, what sort of derivative products will fly off the shelf first? I mean, I don't know if they look at derivatives with equities being the underlying, or are we talking forex? You mentioned bonds. What do you hear?
So in terms of definitely in terms of a lot of derivatives on the FX side, because that's the first natural step that you will in terms of take from that standpoint. Also in terms of given the whole inflation issues globally, interest rates are going to play a key role. And as a result of that, from an underlying fixed income standpoint, we would see a lot of fixed income derivatives as well. Equity derivatives are there. There is always an allocation to equities that will be there as a part of the portfolio. But a lot of fixed income derivatives, a lot of currency derivatives are some of the products that we can actually, in terms of expect currency futures, exchange traded derivatives will be big. In terms of given the fact that we have really strong depth on the from an exchange perspective within Gift City, we see actually exchange traded derivatives picking up in a big manner, and we will see a lot of innovation in that space.
Okay, there's also this talk of, I think, building some sort of, data centers for these foreign firms that want to operate out of GIFT, where they can have better cloud storage systems. I mean, it sounds like a very operational thing. When you read something like that in the budget speech, you don't really pay much attention. But is it that important? Can it be a game changer and actually bring more banks, bring more entities to set up shop in Gift City?
It is phenomenal, and to be very honest, I know that. In fact, I believe that a lot of attention wasn't given to the whole data embassy story. I mean, let me just draw a parallel. The whole point of actually having an embassy in different countries is for the purpose of managing diplomatic relationships. And given the whole foreign policy, now imagine data is extremely important today, and every country is very sensitive about its data as much as it's about sovereignty. Allowing each one of these countries to have embassies which will enable them to protect their data, to look in terms of how critically and crucially and secure the data is maintained within a Gift City environment, will be simply brilliant, because it basically ensures data security, gives each one of the countries the comfort that their data is being handled effectively, and also gives them oversight over the data that is stored, even though geographically within India, it's actually within the IFSC authority. So data embassies, I believe, is a great step in terms of offering that comfort, which from a data perspective is extremely important today, because we have heard data is the new oil, and that's a conversation that consistently happened. But in terms of the whole process that's actually been put around, this is something that's extremely brilliant in terms of the way it's come out.
Okay, all right. Sounds quite interesting. Vivek, we've run out of time, but thanks very much for highlighting some of these nuances that came out as a key positive for Gift City IFSC. Thanks very much for joining in on this. All right, with that, let's